Hi everyone, thanks for joining our webinar today. My name is Iqbal Branch and I head up marketing and product strategy for OptionsCity. As you may know, OptionsCity's mission is to simplify the way clients think about and utilize trading technology. We've been in the space for 9 years now and have offices here in Chicago as well as New York and London. OptionsCity has taken a hybrid approach to software development, spanning the spectrum between building your own custom solution and buying an off-the-shelf solution. We believe this allows our clients to have a quicker time to deployment while still maintaining the custom functionality they require. OptionsCity is a leader in options on future software across the major asset classes with 2 core product offerings. We offer CityTrader, which is a web-based platform for professional traders interested in trading futures and options on futures. And we also have our flagship product, MetroNow. MetroNow is largely focused on market makers, proprietary trading firms, and institutional traders. The presentation today is geared towards users of our MetroNow platform. Today we're excited to talk about MetroNow and VIX Weekly Options. I have joining me today Pat Gardner, Business Development at OptionsCity, and Russell Rhoads, Director of Education at the CBOE. We expect this webinar to last about 30 to 40 minutes and we'll leave plenty of time to answer questions which you can submit through GoToWebinar. With that, I'll turn it over to Russell.
I'm Russell Rhoads. I'm one of the 4 instructors at the Options Institute, and I'm going to spend about the next 20 minutes or so just introducing VIX Weekly's options and the futures, because you really do need to understand the futures if you're going to pay attention to the options. Before I get going, as always, I'm here for educational purposes only. I'm actually going to talk about a couple of actual trades that showed up in the VIX Weekly's options earlier this week. That is for educational purposes only and not to be taken as any sort of recommendation. Now I'm going to give us a brief history lesson on the 2 things that have come together to give us VIX Weeklies, talk about the futures contracts, and then talk about the options as well, and touch a little bit. If you're familiar with VIX, you probably are already aware that the options are closely tied to the futures, but a refresher is always worthwhile. So VIX was created by Dr. Robert Whaley, who is a professor at Vanderbilt. He was at Vanderbilt, went to Duke, went back to Vanderbilt. He actually, an interesting side note, when he came up with the volatility index, they said he got to pick the ticker, and his first choice was his initials, RW. Luckily, that was a stock at the time, so he came up with VIX. I don't know how well it would work talking about the RW right now. Calculation was changed from using a limited number of option contracts and focusing on the S&P 100 or OEX to focusing on SPX options and dramatically increasing the number of options SPX options that feed into the calculation. In 2004, CBOE created the CBOE Futures Exchange and launched VIX Futures. A couple of years later, in 2006, VIX Index Options started trading at CBOE. And then last year, we did a tweak or an enhancement to the VIX calculation, and that's somewhat important with respect to VIX Weeklies, because before we changed the VIX calculation to incorporate what we're saying SPX Weeklies, but options that expire on non-third Fridays. We only had the opportunity to settle VIX options and futures once a month. Now that we're using weeklies, we have the ability to create a weekly settlement, and that led to VIX Weekly's Futures and Options, which came out. The futures came out at the end of July, and the options have been out, I think, for just about 6 weeks now. So, and then on the other end, we're talking about VIX. They came together with weeklies back in 2005, and a lot of people aren't even aware of this. We created SPX Weeklies. The volume really didn't kick in. In 2010, after a change to option symbology, we had the ability to offer weeklies on stocks and exchange-traded funds, and depending on the day now, up to a third of option volume in the U.S. is actually concentrated in the, when we're talking about indexes, stocks, and ETFs, is actually concentrated in short-dated options or weeklies, and then, kind of ended at the same place on 2 different slides. VIX Weekly's options and futures came out this year. Now, The futures, the only thing that's really different with respect to contract specifications is that we can have up to 6 weekly expirations. Regular trading hours, I think everybody's familiar with that, 8:30, I should say AM, 8:30 AM to 3:15 PM, which are the normal SPX index options, VIX index option trading hours, just 15 minutes past the normal close in New York. We do have extended trading hours for the VIX futures, and they open Sunday night at 5 PM, and then with some small breaks, they're basically open until 3:15 on Friday. Very similar to a lot of the other futures markets that trade almost 24 hours a day. Now, the VIX futures, now that we have weeklies, and we're actually discussing this before we got going, the number of contracts is definitely expanded, but you can tell by the symbols which ones are actually the weeklies, and those are the ones that have the numbers that look like that. And that 41, 43, 44, and 45, those are actually what week we are in with respect to the year. And then the rest of the symbol, that date, is the AM settlement date. It's always important to remind people that VIX options and VIX futures are AM settled. So for instance, that top contract, the October 14th, it traded through October 13th and then settled on the open on October 14th. AM settlement is a webcast in its own right, but it's always good to be aware that when you're trading an AM settled product. And then there are the standard VIX futures. Before we launched the weeklies, these are the only quotes that would have shown up on the, this is at the CBOE Futures Exchange website. Now, we've always kind of looked at VIX futures in this manner, where we take a look at what we refer to as the VIX term structure. And this is the blue line was when we were in a period of a little bit, VIX above 20, volatility was a little bit elevated, and we usually see the shape of the curve either go flat or even invert and go into backwardation when we have a high period of volatility. That October 9th line, that red line on the chart, that's what we're used to seeing with respect to VIX futures trading. About 80% of trading days we're in what we refer to as contango. Now, I've started creating the same curve using weeklies, and we're still getting a handle on what constitutes a normal curve, but it's pretty flat. And one of the reasons it's pretty flat is you've got futures that just have, in this case, because both of these curves were created on a Friday, you've got options and futures that only have 2 trading days left or 7 trading days left. So those futures have traded in line with spot VIX so far. I don't want to say are going to, because jury is still out on the behavior of the short-dated VIX futures. But as I'll get into in just a second, they're acting as we kind of expected them to when we came up with this idea at CBOE. Now, the reason that we felt like VIX futures would the short-dated VIX futures would closely track spot index, that idea is rooted in what we would see with the standard VIX futures that have been around since 2004. And what this chart is showing, it's showing the beta of the VIX futures relative to the spot VIX index. And you can see as we get very close to expiration, the third, I shouldn't say the third Friday, but the standard expiring VIX futures contracts would trade or would be quoted very, very much in line with the spot VIX index. So we expected that to happen, and since we launched VIX futures at the end of July, I've been tracking 5-minute data during the normal trading hours, and this is what it's looked like at least for the first couple of months of trading for near-dated VIX futures and VIX index. And that red line represents whatever future is the next one to expire. For example, if this chart extended to today, which is November 19th, the November 24th contract would be the midpoint of the bid-ask would be what we would represent with the red line. The blue line is spot VIX. And why this is somewhat important and why it is people are seeing that it's useful is there's really no efficient way to replicate the performance of spot VIX And the longer dated VIX futures, and I have a bad habit of going backwards sometimes. I'm not going to go back to that beta chart, but if the next VIX future has 2 or 3 weeks left to expiration, it's not as sensitive to movement in the underlying index like a futures contract that has 2 or 3 days left to expiration. So now that we always have a VIX futures contract that has just a few days until it settles, we have a trading instrument that does a better job of anything than anything else that's out there with respect to tracking spot VIX. So now the options, the futures have been around for a few months. The options have been around for a few weeks. We can have up to 6 weekly expirations. I don't think we've gotten to where we have up to 6 weeks listed quite yet. We're working up to that. We've seen pretty good volume off the bat for the short-dated options, so I think it's a matter of shortly we will start to see 6 serial option expirations available. The trading hours are the same as the futures as far as regular trading hours go. Extended trading hours for options, they open at 2 a.m. Chicago time, close at 8:15 a.m., and then we have a little 15-minute reset period before we open for the regular trading hours. For those of you that decided to stay up late and spend some of your personal time learning about VIX today, which means you're in Europe, that basically means that the extended trading hours open at the same time as London stocks open. And they share a settlement date with the VIX futures as well. Now, the first couple of days, the first day we saw 4,000 contracts. The second day we actually saw over 40,000 contracts, and this was back in early August. I think for the month of October, average trading volume was in the 25,000 contract range. We have really good days, and then we have some days where not a lot's going on. I'll talk about that a little bit further. The second day volume, those 40,000 contracts, they were actually divided up among 8 different options, and this was on October 10th. The nearest expiring weekly at that time was October 28th, and even with just a couple of weeks left to expiration, we saw some fairly decent volume in those options. Recently, fast forwarding to this week, today is Thursday. Back on Tuesday, which was the day before the standard November VIX AM settlement, we actually had some November 24th options that were fairly active. We had, I think, 5 or 6 different six different strikes that traded a few thousand contracts, I think 7,000 contracts plus. There were 3 trades that really did show up well to me, or you could really back into what people were doing. Do notice that it's November 24th expiration. That's actually next Tuesday on the open because of the Christmas holiday. Next week's weekly VIX futures and options settle on the open on a Tuesday and not a Wednesday. But we had a seller of the November 24th 16 puts. They're anticipating VIX is going to be above 16 on settlement, and then a couple of neutral to bearish trades where they're expecting VIX to be either below 17 or below 18. And we look at a couple of quick payoff diagrams here. VIX was at 1840. I know it's in the 16s now. VIX was at 1840 when somebody came in and sold, I think, about 17,000 of the November 24th 16 puts. And then we had somebody come in and sell the 17 strike calls, buy the 19 strike calls. I think they took in 75 cents on that, and that's when VIX was around 1810. And literally just a few minutes after this trade, we had somebody come in and do that's the 17-19 call spread, and they did that when VIX was right at 18. So 3 institutional-sized trades actually came in that market. I know we were looking at the volume today, and the volume was kind of light. It seems like a majority of the trades that we've seen so far tend to be institutional-sized trades. So, the weekly futures, they've been around since late July. They've been tracking spot VIX very closely, which is what we were really hoping for. The short-dated options were introduced actually last month, and they've seen fairly good volume. whenever you create a new listed trading product, you really, you can have very high hopes, but you really don't know what's going to happen price-wise and what's going to happen volume-wise until you get them out there. And, averaging 25,000 contracts a day for the few days that they traded in October is really encouraging so far. Major economic events that came out in late October and early November seem to spark some of the volume as well. So real quick, before I hand things off, I wrote up the 3 trades that I showed on the CBOE's blog site. Whenever I see anything interesting in the VIX arena, I like to throw it up on our blog site when I have some time. To learn more about the VIX Futures, that general site, cfe.cboe.com is actually the CBOE Futures Exchange homepage. And then if you want to learn anything about VIX, the best place to always start is cboe.com/VIX. So, and then finally, if you got follow-up questions for me, then I spoke very quickly, and some people also might be watching this as a recording. I give my email address out because questions, they make me do a better job at what I'm supposed to do, which is explaining different ways that you can go about using options and volatility in different formats. So with that, we're handing it off.
Thanks, Russell. So what I'll do now, this is Pat Gardner from OptionsCity. I'll quickly bring up Metro Now and show you what these options and futures look like on Metro Now. So I've logged in to the system, and we'll start, if you follow me over here on the left, I'm looking at some of our popular underlying contracts on the CBOE and CFE. I have the spiders up there as well as the regular VIX futures. And then as we go down, you can see I'm taking a look at the different weekly futures. So you see 47, 48, 49, 51, and I'm looking at the live markets for those. Right now I'm looking at the November 24th expiration, and I can even see the kind of book depth for the futures right on here, so I know kind of what's behind it. It looks like it's fairly evenly distributed, at least after the first level. If I do, for example, want to sell some of these, I can click on this bid, bring up a sell ticket, say I want to do 20 of them, and I can enter it into the system easy as such. Now what we'll go to next is to look at our kind of options sheets over here on the right. So here's my VIX options sheets, and what I'm looking at, and actually let's add November in. That's what we used as an example. So what I'm looking at over here on the left is my futures price right here in the middle in black, or excuse me, the strike price. To the left of that, I'm looking at, don't have November set up actually, but I'm looking at the market bids and offers with my theoretical value that I'm laying in between the two of them. I'm going to get rid of November. We'll focus on December since we have volatility skew set up for that. So right now we can see, so the at-the-money calls for the weekly that expires December 1st based on this future, where my cursor is now. The bid for the at-the-money call at the 18 is 110. The offer is at 145. I have it priced right now from setting up some values earlier at 144. So I'm close to the offer, but mid-market in this example right here. And I can see the put information over here on the right as well. Now, I'm not going to focus on setting the volatility skew just because we recently did some webinars on that, and I believe we have another one planned for some new features specifically related to a tilting two-sided model, as well as some new wing shape dimensions that we're adding into Metro Now in the near future. But what we can focus on is similar to what Russell was outlining, a couple example trades. So if I were to look at this December weekly option that expires the 1st of December, and I can put on the same call spread that he looked at in November. By example, I can just click on the strikes, so I can click to buy this call like he had and sell the 20s. It was 17.19, so we can do that. So I'm selling the 17s, buying the 19s. And what this is telling me is what I have this worth as my theoretical value here to buy this call spread. And from here, I can see an expanded set of Greeks And then furthermore, he was showing you a profit graph, but I can show you right here what happens to what I have this spread worth as the underline moves by manually kind of ticking the underline. So let's say the VIX futures price is increasing. I can now see that I have this spread worth less and less. So it's going to show me, then I can figure out from there my P&L impact. So it's a good tool not only to price a spread for trading at an open outcry, but if you were just simply looking at putting on a trade and kind of wondering about the profitability of it, that's something you can do in here as well. If I traded this, I can go ahead and enter this in as a trade into the system here. Say I did 10 of those. I can enter it in as this price into the system so that I can use it in Metro Now to look at my risk and my inventory and anything else that you might desire. Were I connected as a market maker right now, I could send or receive this trade that I made as an ETN to another broker or another trader. From here, I wanted to pull up the kind of time and sales to look at our VIX options. Specifically, we can look at some of the weeklies and our time and sales here. So ignoring the trades that I've made, I can see all the exchange trades here. So most recently, these the regular kind of serial these calls were trading in December, but I can go in and look and see what's traded on the weeklies in here by running a couple of quick filters. For example, the November 24th expiration. I can bring up all the options that have traded today, so you can see. And this actually isn't today. This is since I started the server, which was just prior to the start of this demonstration. So you can see that they're trading pretty consistently throughout the day. The last thing it traded was the 17 calls for this November expiration. While Russell was talking, there was a spread that traded. It looked like some, it's got marked as a generic by the exchange. It looks like it was a 1x2 that traded. So you can see both the complex order book as well as the outrights that are trading in here. Additionally, in OptionsCity Metro Now, you can click trade and bring up an order ticket right from the time and sales. So in the case that Russell's outlining that there's a lot of large institutional trades going on, maybe there's still something available. OptionsCity is letting you know if you have any theoretical edge from where it's trading, and so you can click on it and go ahead and send a buy or sell order in. So for example, I did want to buy those. I have some warning labels that come up. I can go ahead and enter it in to the system easily as that. I can also have this window set up to only view my trades. So if I want to go ahead and I'm logged in as Trader Pat, I can see the trades that I've made today. So I've traded a couple spreads, including the one that I clicked on entered just a minute ago from the sheets. Now the next step is, someone is asking up here in the question sheet, does Metro Now show the complex order book? The answer is yes. That's what we're looking at. An example of a trade that came through on the complex order book. An individual's ability to see the complex order book does depend on their exchange membership, but it is, if you're approved to see it and getting the data from the exchange, it's definitely shown in OptionsCity. There's a couple of questions about how we're generating the theoretical values for this. I have just kind of sample SKUs in there for purposes of the demos. I don't have an adjusted model for the AM options, and that's what we've done recently some webinars on those, so we thought we'd focus more on the kind of execution and viewing the markets and seeing what's traded. Though, look for another webinar in the future shortly on that, but to simply answer the question is that we're running a volatility SKU that's going through a options pricing model and generating this theoretical value for us. And the kind of final sheet I want to look at is the City Market and OptionsCity, which is more of my electronic trading screen where I would be auto-quoting from where I am market maker. So if I go to the weeklies that expire on December 9th, I'm looking at my strikes in the middle right here. I'm looking at the call information to the left and the put information to the right. Specifically, I have my at the money highlighted in yellow here, and again, I'm displaying my theoretical value in between the bid in blue and the offer in pink, as well as the size of the market out here. I'm also showing right now that my vol on the upside for the calls is definitely too low, and so my edge meters are letting me know that I probably need to raise my skew on that side, is kind of what this is telling me, and it's showing me kind of how the market is priced from when I set originally kind of a rough volatility skew. Again, on here, I can click on a bid or an offer or a quantity and generate an order ticket to quickly put on this trade. I can also come in here in terms of auto quoting, highlight some strikes if I'm a market maker and I want to quote the at the money. It's as easy as going check selected, open up my quoting tab, and defining how much theoretical edge I want to quote for. So if I wanted to be, I want to be well wide on my bid, so I'm going to even go, maybe I just want to meet my market making obligation and that's it. But maybe I am looking to sell the calls, so I'll only look for 20 cents of theoretical edge, and I will be 50 up on the offer, and I'll only be 4 up on the bid. So once I hit apply, we'll see these gray columns adjust with the quoting parameters that I just put in. Now you'll see these quantities are 0 because I'm not going to be sending a actual amount that's accepted by the exchange, but I will be able to send these offers that we see over here on the right. And from here, it's as easy as clicking Start Quoting. Now this time I did have a safety warning come up that said I'm crossing the market, so it's not going to let me send my quotes, which is a common kind of safety setting that is going to trigger when you don't have your volatility skew set up in line with the market enough, which is why my quotes that I attempted to send are getting rejected. So in this case, I would just have to simply fix my skew, as we could see it's off, and then resubmit my quotes. In terms of quoting on OptionsCity, it's as easy as defining theoretical edge to quote around like I just did, or you can do several different things. You can have automatic edge adjustments based on the delta of the option. There's some further calculations we can do for the complex order book where we take into account the number of legs, the delta, the vega component, and even weight those against each other to figure out kind of how we want to quote the complex order book. We can also set safety settings at different levels to have you widen your quotes as maybe in a fast market situation, or maybe as your quotes get filled, you don't want to stop quoting, but you certainly want to widen out your theoretical edge and maybe adjust your quantity automatically. All this kind of scripting or ability is built in to the Metro Now platform. Once I see my trades coming in, again, I'll know that my quotes got hit or that I traded something right here in my fill viewer. I didn't happen to have anything show up right now because my safety settings didn't even allow me to send quotes. Let's look over here and see if there's any more questions right now. That sort of concludes a quick look at some of the execution and what these options and futures look like in Metro. How are we calculating the fair value of the weekly VIX futures? Well, right now I'm looking at the bids and offers. So anything I'm using as my underlying price for the options is based off of the bid and offer of the futures. I'm running the theoretical value for both buying and selling of the options, if that's what the question happens to be. All right, I think we already answered the other questions. If there's any other questions, go ahead and chat them in now, or we can go ahead and wrap this up. I think thanks everyone for joining us. You can get a hold of Russell's contact information that he put on the slide. You can also get a hold of us at OptionsCity at sales@optioncity.com. Additionally, we'll make a recording of this webinar. We'll have it available via our website and YouTube channel sometime tomorrow. All right, having said that, thanks for joining us, and we'll sign off.